Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully all of you guys had a very beautiful long Labor Day weekend. So keep in mind, in today's video, all of the options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. There's 3 main reasons why I absolutely love selling puts and why I use 80% of all my trading capital to run this strategy. Reason number 1, it's very easy to learn, manage, and also scale up or down. Depending on your risk tolerance, the strategy is very easy to comprehend, and you can adjust it up or down depending on the size of your account. Reason number 2 why I love selling puts in the market is because it's very low time management. Doesn't require a lot of time at all, guys, about 15 to 20 minutes per day. So if you have a full-time job or you're traveling or anything in between, it could be a very nice strategy for you. And reason number 3 why I love selling puts so much is because it's a very consistent and high win rate strategy, provided that you respect all these strategy rules, which I'll outlay in today's video. Well, the win rate is roughly about 90 to 95% of all the contracts that you write. You're just going to get to collect the very juicy premium. And if not, you will get assigned some very high quality stocks at some ideal levels, as I said, provided that you are respecting the strategy rules. So in today's video, we're going to do a few things together. Number 1, we will be going over the expectation for the week. What do we have in terms of macroeconomic catalysts that we have to look out for? Number 2, what do we have in terms of earnings catalysts that we have to look out for as well, which could move the market in either direction? And then thereafter, number 3, what do we have in terms of a technical outlook on the chart? Who's in control? The bulls, the bears, how's the rotation, and what are we going to do coming into the September seasonality, which is a weaker period of time for the markets. So we'll take a look at the pre-market prep and give you guys a good sense of the volatility events to take a look out for this week. And then we are going to, of course, get into the strategy rules. So I'll be doing a very brief rundown of the strategy rules for about a minute. Just make sure, guys, that you pay special attention to all of the strategy rules if you want to have the best success rate with this strategy. And thereafter, guys, of course, we're going to get into the top 5 options plays of the week. I'll be running you through each and every one of them, why I like them so much, which levels I'm going for. And thereafter, as per usual, we will take a look at top 10 bonus plays for the week as well. So make sure you stick around to the end of the video. So without further ado, let's jump right into today's action. So in terms of number 1, what do we have in terms of the volatility catalysts for the rest of the week? In terms of macro, a lot of that is going to come down to some economic data points, which start on Tuesday, tomorrow. The ISM Manufacturing Index. We know that manufacturing has been somewhat weak here over the course of the last 6 to 9 months. In the event you come in under the expectation of a 48.6, it'll kind of put a point in favor of the bears in terms of the economic slowdown narrative. Pay attention to that, but the data points thereafter, guys, are probably far more important and far more impactful for the markets. Wednesday, jobs openings report. We know that a lot of the Fed's attention right now is focused on the jobs market. A lot of the market's attention is focused on the same thing. You guys remember what happened about a month ago when we got the unfavorable non-farm payrolls report on a Friday. The markets went down to 2.5%. A lot of emphasis will be placed on this jobs openings report, but not only this one, the one coming on the Thursday session as well, the private ADP employment change. And then you wrap it all off here, guys. Friday, the biggest day of the week, in my humble opinion, which is going to be the exact same non-farm payrolls report. The expectation is for 78,000 new jobs to be added to the economy. So pay special attention if this one comes in underwhelming or under the expectations. The markets probably will not take that very well. It'll do wonders for really consolidating the fact that the Fed probably will cut interest rates in the month of September. But initially, you might just get a shock to the downside. So pay attention to the jobs reports this week. Those will be the ones that move the market the most, in my opinion. But the non-farm payrolls is only on Friday. So if we have a bit of weakness coming into Tuesday, we can still find some decent short put opportunities to pick up early on in the week and then possibly try and wind them down before the Friday session. So like on Thursday or something like that. That's how I'm going to be playing this week overall if we want to avoid the big day, which is Friday. Thereafter, we have a few earnings to take a look at, guys. Salesforce on the Wednesday session after the close. This could affect other software as a service plays, so keep note of that. And then on Thursday, a very big day after the close, we get Broadcom earnings. So Broadcom earnings is, of course, going to impact the direction of many names in the semiconductor trade. As a result, Friday might just be a bumpy period. That's when you're going to get the true impact of the Broadcom earnings and also from the non-farm payrolls. So once again, for those two reasons, non-farm payrolls and and Broadcom earnings Thursday after the close. Friday, probably going to be a bit of a volatile session. As a result, any trades that were opened on Tuesday or Wednesday should be wound down on Thursday before the close if you want to avoid the major volatility catalysts for this week. Now, in terms of other things that we have to look out for, guys, you guys know that September is not the best month for the markets. As you can see, in terms of seasonality, it's a very choppy period of time. On average, since 1945, September has proven to be your worst performing month of them all. Take a look right here. The average performance is down about 0.6% in comparison with the month of August, which is largely flat. Now, of course, we can zoom into the data a bit more and get a more concise view from 1996 to 2024, but it paints the same picture. September is largely your worst month on record, but it does not mean that every single month of September is going to be red. If I take a look here at the last roughly 20 years since 2007, you'll see here that for the month of September, sometimes it's green, but a lot of the times it's red. And when it's red, it's big red. So please keep that in mind. We're coming into a period of time which is challenging for the markets. We have a lot of things to look out for, guys. Non-farm payrolls on Friday, CPI the following week, and then thereafter, September 17th, you get the Federal Reserve meeting for the interest rate cut. So if there is one period of time for the markets to consolidate, whereby it has a lot of catalysts to do that, right? If the non-farm payrolls comes out bad, if CPI is a bit hotter than expected, and if the Fed gives a hawkish stance when it releases the interest rate cut on September 17th, well, then September is probably going to end up as a red month, but it is a fantastic opportunity to be buying the dip, in my opinion, because we literally just finished a gorgeous earnings season whereby 80% of all companies that reported beat revenue estimates and increased guidance on revenue, and 80% of companies beat on EPS estimates and increased their EPS guidance for the end of the year, which leads me to believe that if we are buying the dips during this fall seasonal period of weakness, we will probably get heavily rewarded come the end of Q3 into the end of the fall into Q4, which seasonally is one of the best periods of time for the market. So please keep all of that in mind. If we want to take a brief look at some of the inflation numbers right now, we just got a reset on the Trueflation Index. Now it is at 2%. So inflation, largely not a problem. I'll remind you that this index measures 15 to 18 million different items on a daily basis, over 30 million data points altogether, which makes it more reliable than the CPI or maybe the PCE. So inflation is not really a concern right now, at least not for me. Really, it's going to be all about the jobs market. So please keep that in mind. And your interest rate cut projections remain at about 86% odds for a rate cut of 0.25% in the September meeting. And by the end of the year, possibly one more coming in for the month of December. So keep all of that in mind when you're looking to shop for plays during the month of September. I think there will be some fantastic buying opportunities. And as a result, I will use my favorite order type to go shopping for those buying opportunities, which is selling puts well under the market. So that is your current market preview for the week. Just be careful. Thursday and Friday are going to be the most volatile days for this week overall. Now, in terms of number 2, the strategy rules. So here's the strategy rules, guys. Take a screenshot of these rules because I will not be going through them individually. I'll leave a video down below in the description where I post the bullish or bull market wheel strategy rules. Make sure you take a look at that video. I go through every single one of these rules individually, line by line, and tell you guys why you need to respect every single one if you want to have the best possible chances at the highest win rates and the highest consistency with this strategy. The number one thing you should always focus on, guys, when selling puts in the market is doing it on high quality, high conviction companies for you. So when I show you guys the top 5 options list and the bonus plays as well, if you don't agree with those picks, if they are not a high quality company for you, or you don't necessarily have high conviction in them, by all means, don't take them, right? All of these plays are just obviously for educational purposes. They're the plays that I'm looking at, but your plays might be different. At the end of the day, you want to be happy with the stocks that you own. And there is always an assignment risk to selling puts. As a result, if you get assigned something, well, you want to have good conviction in the shares that you're holding until you can write covered calls to possibly get out of the position as well. So make sure you take a look at the strategy video down below in the video description. It's about 10 minutes, guys, but just brush up on it. If you've been a recurring viewer to the channel, you probably know these rules by heart. But if you're new to the channel, definitely go have a look at that video. I'm not going to do them today in today's video because as of right now, we're just trying to save some time and make the videos as short as possible. So those are the strategy rules. take a screenshot and make sure to respect every single one. Now with that out of the way, guys, let's take a look at the top 5 options plays for the week. So stock number 1 as part of the top 5 options list is going to be a company that we all know and love. Well, maybe some of you don't, but it's going to be AMD. So AMD, there's a few reasons why I like this stock a lot. Number 1, the stock's been consolidating now from the highs. It's coming into a clear support area, which ends at about 160, but there's a larger support area at play down here, which starts at about 150, which I really want to be taking advantage of. A very large support, and also could be synonymous with just looking for a monthly higher low in the market. This would not look so awkward, would it? So I really want to be playing these pullbacks on AMD, and my preferred location is down there around 150. Fundamentally as well, the company has a lot of upside potentially in the future at around 170, where the stock currently is roughly right now. You're looking at a 1.46 peg, a forward price sales of under 9, and the growth path for the company is very clear, as we just heard in their earnings as well. The next 2 years will be fantastic for AMD in terms of EPS expansion and in terms of revenue expansion as well. So I do want to play these higher time frame pullbacks and possibly make the most out of this downside location right there, which is about at 150. Now, the expected move for the week this week is about 156.96. Let's call it 157. But that is slightly too high and slightly too close. I want to be looking for early morning weakness coming out of the Friday weakness that we just had and try my best to get down here in the 150 strikes. So let's have a look on the options chain to see if we can find below our expected move of 157. By the way, if you don't know where to find the expected move, very easy. Just go to this website right here, barchart.com. Type it into Google, bar chart, expected move, and then whatever stock you're looking for, and you'll be looking for the lower bound of the expected move here, guys. You can see it on the chart. This is Apple, for example, and you can also see it at the lower price here. Just make sure you're trying to write below the expected move every week to better your odds of not being assigned. So in terms of the options for the week, guys, we'll just pull up the options chain real quick and go shopping for AMD and see, can we find close to the 150 strike, which is my preferred location? So I'll remind you what we're looking for here in terms of ROI. We're looking for 0.5%. Right? The 0.5% rule is a rule that I derived, which is basically a sweet spot. It provides very good ROI on an annualized basis. It's not too close to the current stock price, which increases your odds of being assigned. And it's also not too far away to, that you're not making enough money by putting these trades on, right? If you want to know how to calculate the 0.5% rule very easily in your head, just divide the strike price by 2 in your head. So 150 divided by 2 is 75, and you're just basically looking for 75 cents on the bid right here. If you guys want to see that in terms of the actual calculation, it's very simple, right? So just do 75 cents, which is what you're looking for, by 150, you'll see that is 0.5%. So where is the 0.5% rule on AMD right now? As you can see, it's currently at 155, which is a little bit too high. Now, granted, this is below the expected move of 157, but it's just not close enough. However, if AMD has a slide on the Tuesday morning session and comes down another 2% after Friday's weakness, well, then maybe we'll find the required premium here at 150. For the week, because it's a short trading week, maybe we won't be expecting the full amount of premium, the 75 cents. If I can find 60 to 70 cents right here on the 150s, I'll definitely be going for it. Maybe even the 152.5s, but I really want to be as close as humanly possible to the second line of defense down here, the deeper support level. So that is stock number 1. Of course, I know that Broadcom has earnings on Thursday, but if we have an early week dip and then maybe, Wednesday and into Thursday into Broadcom earnings, we have a recovery, we'll probably be able to wind down those plays for a profit and then just exit the trade before Broadcom earnings and non-farm payrolls. So please keep that in mind. Stock number 2 we're going to be looking at is going to be SoFi. So this is stock number 2 of the top 5 options list. And SoFi is going to be a play that I'm going to be playing it in a staggered fashion. So I'll explain what that means, right? In terms of the price action right now for SoFi, we know we did a great job of clearing the top end of the 2021 resistance range and that the bulls are in full control of this chart. Gorgeous weekly uptrend expansion, but we're kind of a bit high, right? The weekly timeframes are slightly overbought. The monthly candles are very extended as a whole, but we know that we also have a very nice fallback location, which is these guys right here. $24 down to about $22. The bulls did a great job of building up momentum to eventually crack through this area. And now we're just looking for the infamous breakout retest trade and using this area of support. What do I mean when I say I want to play it in a staggered fashion? Well, I want to be playing the retest down here, but I don't want to be going all in because I know that if the month of September is bad, that might lead into a bit more weekly consolidation, which could revisit the lower end of support and maybe even a bit lower back down to 20 bucks. So what I mean when I say staggered is I want to play some contracts here, but leave some buying power open in the event that I have to also play them back down there for a larger monthly consolidation phase for the stock. Now, SoFi right now at about $25. The valuation is not crazy. It's currently still trading at about a 9 forward price to sales, which is fair considering the fact that other stocks in the fintech space like Robinhood are trading at over 20 forward price to sales. So the valuation, in my opinion, is still manageable, but I would not be surprised if we can see some bigger pullbacks in the event that the SPY and QQQ have those similar pullbacks as well. So I want to play a few contracts pulling back into the support location. Call it the mid 23 area. The expected move for the week is $24.38. As a result, let us go see, can we find maybe some premium on strikes 24 down to 22 bucks? Let's have a look on SoFi for the week, shall we? So we're not going to go too heavy on this one, but I do want to participate. So that being said, if we're looking for the 0.5% rule around 23 something, right? You'll be looking for half of 23. That's about 11.5. 12, right? So that being said, that's how much premium you're going to be looking for at the bid right now. Unfortunately, there's not that much at 23.5, right? It's very close, but it's not there yet. You need a couple more pennies, which means that you would need SoFi to continue onto a slight decline into the early Tuesday session. That is probably going to free up the 23.5 strike or the 23 strike in the flat 23s, right? I'm a big fan of playing both of these. As a matter of fact, I do have one contract active right now that you can see right about there. I have the 23.5s, which I got last week for a bit more premium. I got these for 1% in total premium, 24 cents to be specific, and now I'm currently up 50% on that trade. So just be patient, wait for the red days on SoFi, and try to get as deep as possible into this first area. But once again, don't go full in on this one. Save some buying power in the event that we have to DCA into the lower 20s thereafter. So that's it for stock number 2. Now, stock number 3 is going to be another stock that most people know, which is going to be HIMS. Now, there's a few reasons why I enjoy playing HIMS right now. Number one is the valuation is becoming a lot more manageable. In around the $40 range, you're looking at a forward price to sales multiple of only 4. That's not too bad considering the stock is growing revenue at 19% per year and 17% EPS growth on average over the next few years. So the valuation definitely does have some expansion capacity to it, but we know that the stock price has been very soft recently. Look at this massive candle close for the month of August. You really would not be surprised to see some further continuation down to the month of September. But one thing that HIMS has been doing very well over the course of the past 2 years is respecting the heck out of this monthly 12 EMA. The monthly 12 EMA comes in at $40. So it stands to argue if we're trying to position under that and also targeting the next relevant area of support, which truly starts around the mid-30s area, we probably have a decent trade, a decent area of confluence on our hands, and the valuation is a bit manageable, right? Also, this one has some pretty good volatility. You can see it was down 4% on Friday. If we open up the week again red on the Monday session, we might be able to find some strikes in my desired location, which is the mid 30s. Call it 36, 35, 34 area. The expected move for the week on HIMS is $40 flat. I want to be playing this one with some distance though, not exactly at 40. So let's pull up the options chain really quick on HIMS and see how far can we actually get in terms of the 0.5% rule, right? So if we're looking for roughly in the high to mid 30s, half of the high 30s would be roughly what? 17, 18, 19, 20 cents. Where are we finding that 0.5% rule right now? As you can see, it's currently at about 38.5. The bid and ask price should be about 18 to 20 cents. So that'll be one possible strike that we could explore, and it is below the expected move. However, my desired location really starts at about 37.36. As a result, if on Tuesday morning we have a slight decline, well, you guys know what I'm probably going to do. I'm probably going to go for maybe the 37 strikes or the 36 strikes if they become available. If HIM drops another 3-4% really quickly to start off the week, then I will be targeting this one in the lower bound area all the way down there. If it makes its way down there over the next coming week or so, and I get assigned, I'll be getting assigned at daily oversold conditions, I'll be getting assigned at a decent fundamental valuation, and I'll also be getting assigned at our next closest area of support, because right now it's kind of in the middle of nowhere. So I really want to be patient and get my desired price. Always let the market come to you. Now, that's it for stock number 3. Stock number 4 is going to be another one that you guys know very well. It's going to be PayPal, and this one's been a recurring theme in these top 5 options videos for a better part of the last, month and a half, because it's been consolidating in the exact same area. As a result, we can keep on playing it. This area on PayPal is the support range for the last almost 3 years. You can see the bears have never really been able to break much lower than that. In terms of fundamental valuation down here, it's not too bad at all. At 71 bucks, it currently trades at a 13.4 price to earnings, a 1.13 peg, a very low price to sales multiple of 2, and a fantastic free cash flow yield. All metrics that point to the fact that PayPal is a pretty cheap stock in the market right now, and we also have very beautiful support. So I will still be wanting to play this very wide support range, which starts in the high 60s and goes all the way down to the low 60s. I'm a big fan of playing the 67, 66 strikes at the lows of what we had after earnings. So those are the areas that I'm going to be looking for this week as well. The expected move for the week is about 68.62. So let's go see on PayPal if we can find any premium down there, or maybe do we have to wait for a bit of a red day, right? This one's been fantastic. Many opportunities to be had over the past few weeks. If we take a look at around 68, we want to find 0.5%. So you're going to be looking for 35 cents. As you can see right now, unfortunately, it's not there, only at the 69s, which means that Tuesday morning, you will have to have a red day on PayPal to free up this trade. In the event that you see a red morning on PayPal tomorrow morning and you are interested in some of these strikes, you would be targeting these 68s down to about 67s. Not a bad location for this stock, all things considered. That is stock number 4. And finally, stock number 5 is going to be another semiconductor play, but one of my favorite semiconductor plays in the entire market. And we're going to be talking about Micron. Micron, I love it for a few key reasons. Number 1 has to be the valuation. In around $110 range, you're looking at a forward price to earnings of 14.12. This stock is growing revenue on average for the next 3 years, 15% per year. It's growing EPS almost 27% per year on average, which gives it a PEG ratio of a very low 0.53. This is one of the lowest in the entire semiconductor industry as a whole, and forward price to sales is only a 3. The industry average right now is sitting at 14. So this one is undervalued no matter what metric you look at it. And also, we have a very nice support area. Talking about the 110 down to 100. Clear resistance for the bulls here for a while. Support again when we tested this one just a few weeks ago at this point. So I do want to be targeting this whole 110 to 100 area in terms of the area that I would prefer to sell put options into. Now, the expected move for Micron on the week is 114.58, but that's just not close enough to my 110. I really want 110 or better. So you guys know the drill. You will probably have to wait for a bit of a red day on Monday or Tuesday, which is what we do. We love selling puts on stocks that are red coming down into the expected moves because it allows us to write significantly lower into our desired locations. So let's have a look on Micron. Can we actually find some short puts down into the 110 range? I'll remind you, half of the 110 range is about 55 cents. So that's the amount of premium that you will want to look for if you're interested in this trade. As we can see right now, that amount of premium is only available roughly at about the 112, 113 strikes. Now, these strikes are below the expected move, but still not exactly at my 110 area, which is the desired location. However, if Micron has a bit of a sell-off Tuesday morning, down 1-2%, maybe, just maybe, you'll be able to find 110 or better. And of course, if Micron has a 3 to 4% decline on Tuesday, well, then you're going to get even better than the 110 strikes. Maybe you can find 109, 108, maybe even 107. Who knows? It depends on the size of the downside. So be patient, let it come to you. And then, as you guys know, you want to be going as deep as possible into the support ranges while still making your 0.5%. That is stock number 5. And similar to AMD, in the event it has a very negative start to the week, and then we find some opportunities, then it bounces Wednesday and Thursday into Broadcom earnings. You guys know the drill. I'll be looking to wind this one down Thursday before Broadcom earnings, and before non-farm payrolls come out on the Friday session. So those are your top 5 options plays. Hopefully you enjoyed those ideas. Now let's jump into the top 10 bonus plays. So for the bonus plays, I won't be giving you guys the expected moves. You guys are now professionals at doing that on your own, but I will be giving you guys why I like the stocks and which areas I do want to play them in. I'll break it down into 4 different categories. Number 1, 4 growth names I'll be looking at. Number 2, 2 value names I'll be looking at. Number 3, 2 small account plays for those of you that have small accounts but still want to try your hand at the wheel strategy, meaning the share price of the stocks is small, so doing it on 100 shares, 1 contract, right, is not that buying power intensive. And then thereafter, I'll be looking at 2 large account plays for you guys that enjoy playing these short puts on stocks that have share prices of, you know, $250, $300, $400+ per share, which means you have to have a lot of capital to do it. So let's jump right into the bonus plays, shall we? Okay, so for the bonus plays, in terms of the growth names I'll be looking for, stock number 1 is going to be Rocket Mortgage. Rocket Mortgage, why I like it? They've been doing a great job of consolidating the online mortgage marketplace. They acquired Redfin, and they also acquired another fantastic company, which is Mr. Coop Mortgages. Rocket also stands to benefit from the macro tailwinds of rate cuts. However, we know that this stock has rallied an absolute ton. Beautiful weekly uptrend, looking for a pullback. I'll be looking to play this one in a couple different ways. I'll be looking for the 16 or 16.5 strikes to play the initial pullback with some volatility, but I'll be saving some buying power to also play it if it does retest this larger area down here, which is roughly the $15 range. So I like this one in the mid 16s for a couple contracts and the 15s as well for a couple more contracts. Playing the pullbacks, I would not mind being assigned on this one. I think it still has a lot of upside into it. As a result, I do not mind playing it on the pullbacks. Stock number 2 is going to be SOXL. Be careful with these 2 or 3 at a time leveraged ETFs. They are fine to play if you have the risk appetite to play them, but you do not need to play them too close. The reason that I enjoy playing SOXL is because we know semiconductors have been pulling back recently, and as a result, the SOXL is based on the SOXX. You can clearly see here on SOXX, there is a massive area, guys, that we can backtest right now. We're talking about this 236 down to 215 level, which roughly away from the price right now is anywhere between 5 to about 10-12% away. SOXL is 3 times that, meaning you'd want to be roughly either 15% away or all the way down to about 30% away. So the way that I'm playing this one initially is I will throw a few contracts down here at the low 20s, call it 22, and then I'll throw a couple more contracts if semiconductors really fall off a cliff in the month of September, down here 19, 18. So I'll be playing a staggered approach as well. I want to be playing these lows, but not with full buying power. I will save some back down here. You guys can see that I do an SOXL contract every single week for the most part. I have the 22.5s for Friday, which I was able to pick up last week on the Friday session. Now, that's stock number 2. Stock number 3 is going to be BITX. This is the 2 times leverage contract on Bitcoin. Once again, be careful with these 2 times leverage plays. Do not get seduced by the premium by playing them way too close to the market, right? If you take a look at BITX, on a Bitcoin pullback, you'll see that very close, it's offering a substantial amount of premium. That's a very easy way for you to get assigned, right? So don't play these in such a greedy fashion. You can play them with some good distance. Now, take a look at the Bitcoin chart right now. We know that we're doing one very clear thing. We are trying to backtest the previous highs, right? 108 down to about 100. So we want to be playing the lower end of this $100,000 range. Meaning Bitcoin probably still has maybe another 5 to 7% that it can pull back. BITX is a 2 times leverage play, meaning if you want to play the lower end of Bitcoin, you'd have to be roughly 10 to 15% away on BITX, which means that on BITX, I want the lower $40 strikes. As you can see right here, I already have a contract myself for this week. I have the 45 strike for about 32 cents. Now, that was not the low of the day. You can see they're trading for 40 cents right now. However, it's not too aggressive either. So if I'm looking to play Bitcoin or BITX over the course of this week, I really want to go for the lower 40 strikes, guys. So make sure that you get assigned. If you are getting assigned, you're getting assigned into the most favorable location, trying to play the Bitcoin weekly pullback, but also trying to play the Bitcoin monthly higher lows. And it can extend down into that lower $100,000 range. So please keep that in mind. Do not be too greedy on this one because the short-term bears are indeed in full control of this chart, but we are coming into support. As a result, I do want to play this name. And now the last one, guys, is going to be NVDL, another 2 times leverage play. So I'm bringing all these 2 times leverage plays because I know that you guys like playing them a lot, but some of you guys just play them way too aggressively and you get trapped too close to the highs, and then you don't have enough money or buying power to go shopping in the actual locations where you would actually want to buy these ones, right? NVDL is 2 times NVIDIA. NVIDIA is a fantastic name, but we know that since earnings, it's just been pulling back. We might be looking for, in the month of September, a monthly higher low. And where can we maybe find that one? We'll probably into the mid 150s or 150 flat. So if I want to play this pullback with some distance, well, I got to give it some distance to kind of play, right? So NVDL, the area that I really want it, is in the lower 70s down to 60s. You'll find here that on NVDL, this is a pullback of roughly 15 to 20%, which means that NVDA, that will be a pullback on NVDA of 7 to roughly 10% or 11%, which would mean that we're playing the mid 150 to low 150 range on NVIDIA. It's cheaper than playing NVIDIA, but also moves in a more volatile fashion. So don't get seduced by playing premium too close to the market. You really want to be targeting the low 70s, right? And possibly even high 60s. So as you can see right here, the low 70s are indeed offering 0.5%. So do not get too greedy and play this one all the way up here where the premium is insane. No, we really want to stick with our rules, play this one with some distance and kind of just follow it to the downside. If we keep writing down here, or let's say on NVIDIA, if we on NVDL, if we keep writing down here, the market comes down there, but doesn't assign us, right? We just get to pocket that premium. The following week, NVDL will be down here. We'll be able to write even further the following week. This is how I've been playing SOXL. This is how I played CoreWeave on the downside 1,000,000 times and only got assigned once when I did it a bit too close. But this is how you can kind of play the names with big volatility. Just wait for big red days and then play them way, way, way under the market. Just don't get greedy though. Look for the 0.5% rule, even though they are 2-3 times leveraged. So those are the growth plays. Now, in terms of the value plays, because I know that some of you guys enjoy playing some more value-oriented names. One of them is going to be Nike. So the reason I enjoy Nike is, number one, because we're in a fantastic area of support. Look at this. We reclaim this area, and now 75 down to low 70s is not a bad proposition for Nike. We also know that they're midway through their turnaround story. The new CEO is basically rekindling a lot of the brand sponsorships for large sporting events and the biggest athletes in the world. And also the new CEO is rekindling Nike's partnerships with a lot of wholesalers. Those two things is what Nike kind of lacked focus on for the past 2-3 years and why the stock has really fell off a cliff. But now I do believe it's a great opportunity to be giving this company a chance. As a result, on any big, decent red days, I am looking to play Nike in the mid to low 70s, deep into the support range. Stock number 2 is going to be Walmart. So you might remember Walmart was on the top 5 list for the last 2 weeks, and I have been playing it every single week in the last 2 weeks of time. That being said, Walmart, fantastic opportunity down here, mid to low 90s. Think 94 down to about 92 bucks. Phenomenal area of overall support. It has been that way since December, except for obviously the tariff crush. Fantastic area for Walmart. We covered their earnings. Their earnings were quite good. So as a result, I want to be playing this one, especially because the XLP consumer defensives is still stuck in a bit of a trading range right here. So I want to be playing some of the names in consumer defensives when they pull back in a big support area, especially companies that are as solid as Walmart. So I will be looking for this one if we start off the week red and Walmart has a dip, Tuesday or early in the Wednesday session, and I can find some good premium down here, 94 or better. I'll be looking for this one, but not only this week, maybe into next week as well, right? So the following week hereafter. Now, 2 plays for small accounts. Number 1 is going to be New Holdings. Fantastic name. You can call it the SoFi of Latin America if you really want to. We covered their earnings a few weeks ago, and we saw that they had amazing earnings. The valuation around 13 bucks was really cheap. Forward price to earnings of 23, very low PEG ratio as well. And the estimates, if the company just executes on its model, the price per share estimates for 2027 and 2028 are a lot higher than they currently are. Mid 20s to mid 30s, 2027 and 2028 respectively. That being said, this stock is clearly breaking out of where? A very nice prior resistance and support area. This is a very big area for the stock, guys. 14 down to roughly 13. As a result, if they can present me an opportunity for the good old breakout retest trade, I will be glad to sell some put options down here, $14 to $13. So just pay attention to it. Fantastic rally post earnings, as we can see. Daily overbought conditions. If the market is weak this week, and presents me an opportunity to go shopping for the 14s or the 13.5s this week or into next week, I'll be a big fan of playing NU. Thereafter, we'll be looking at Oscar Health, another fantastic name to run the wheel strategy on. Oscar Health, right? It's part of the whole health insurance trade that's been wildly out of favor for the past year at this point in time. The valuation on this one is very cheap as well. I think it can be the fastest horse in the race for recovery of these health insurance stocks, of course. And of course, it's a retail fan favorite. It gets a lot of retail interest. That being said, 15 down to 12 is the area that I've been playing on Oscar Health almost every single week here, guys, for the past like 2 months at this point in time. Fantastic area of support. Any big red days are great opportunities to go shopping for some puts, for short puts down here. $15, $14, $13, as low as you can possibly go. You will see that for this week, again, I have an Oscar put contract right now for the 15.5s. So I'm playing it a little bit aggressively, but you can be a bit more patient and wait for further downside. And then maybe you can unlock the 15, 14.5, or maybe 14 strikes, which are actually into support. Special shout out, of course, the head and shoulders pattern. If that brings you back down, you guys know what to do if you want to play this stock. That's it for the small account trades. And now for the big account trades. Number one is going to be Equifax. Equifax, fantastic company, also has some macro tailwinds behind it. The rate cuts, right? When the rates start coming down, people will be applying for more financing products, which means more credit score checks overall. Of course, Equifax has many different lines of business, but that's the major one that will probably see a nice upswing here in the next roughly year and a half's worth of time. Very nice area of prior resistance, very nice area of prior support as well. This area has been support since December of 2023. The 200 weekly EMA is also there too. So if I can find some short puts, I did so with my Discord members over the course of this most recent week. 240, 230. I'm a big fan of playing this fantastic company with very solid fundamentals, so keep that one in mind. And the other one, Moody's Corporation, for the exact same reasons. This has macro tailwinds, guys. Their debt repricing pipeline is huge for next year, 2027 and 2028. Analytics business is doing very well. We covered their earnings, great earnings, solid company, toll booth company. It is really just a fantastic company overall, guys. The moat on this one is huge, right? They have the credit ratings business, of course, and they have the analytics division. That being said, breakout area was this area right here. Call it roughly 500, down about 485. We are just looking for the classic breakout on the monthly, retest of prior areas in the market that held this stock back for a long time. And that being said, the 12 monthly EMA is also an area to be targeting here. You can tell in the context of bull markets, playing this one around the 12 EMA is usually a very attractive proposition. And that area is roughly about 485. So if Moody comes down into us over the next 1 to 2 weeks, I want to play this area under 500, call it 490s to 480s. Nice little pocket to be playing this stock in. If you have a large account and you want a high quality name, that is also a high conviction name for most people in the market, very widely owned by institutions. So that is everything, guys, for the top 5 options plays and for the bonus plays. Hopefully you guys were able to find some ideas across all of those names. If you enjoyed today's picks, consider dropping a like on the video. Would appreciate it for the growth of the channel. Consider subscribing if you're new as well. We do these videos every Sunday or Monday in the event that it's a holiday for the prep for the upcoming week. And last but not least, if you have any questions on the strategy, please feel free to leave them down below and I'll do my best to answer you tonight before the week starts. That way you have everything that you need to really have a beautiful week in the stock market. So additionally, guys, last but not least, in the event that you wanted to join a trading and investing community whereby we specialize in running this strategy in the markets every single week. There's over 200 other members and I trade the markets with them every single day. And we have a very fun time in doing so. The link to the Discord is down below in the video description. What do you get in the Discord? Well, quite simply, you get access to all of my trades in real time, whether it's the wheel trades or other strategies that I do, such as call debit spreads or put credit spreads sometimes, or leap call options or swing trades with shares. You can see here is our last week of trades in the markets. The green little check marks are win. The red little circles are losses. I'll take you guys through, pretty much the last 2-3 months. I do weekly recaps every week. So you get access to all of the trades in real time. You also get access to our private morning live streams, Monday through Friday for about 2-3 hours. I live stream at the open. I trade live with everybody, and then I answer all your guys' questions on your stocks, your options, and your long-term portfolios. You also get access to our chat room, so I'll answer all your chats all throughout the day if you cannot be in the live streams. And you get access to our private educational section as well, where I teach technical analysis, fundamental analysis, different options trading strategies, a ton of content that I don't necessarily put on YouTube. There's about 13, 14, 15 videos in there. All, you guys know me, 45 minutes, an hour long, and it really goes through some detailed strategies and best practices to grow accounts as well. And last but not least, you get access to all my watch lists and all my charts that I use to trade the markets every day. You can just copy paste all the watch lists, all the support and resistance levels, everything. It takes 10 seconds. You can just copy paste everything. It comes with all the support resistance levels, the templates, all the earnings rundowns as well for fundamentals, everything. Just an added bonus for all of our members. And we still have the Labor Day coupon code active for 30% off of your first month in the Discord. If you wanted to try it out and get a discount in doing so, you can use the code Labor Day in all caps, all together in one word. I'll leave the code in the video description as well. So hopefully I see some of you guys in the Discord with us soon. You'll probably have a lot of fun and learn a lot in the process too. And if not, I'll see you guys right back here on the channel. That's it for me. Have a great week in the markets. Wish you all the best of luck. Keep crushing it. Take care and peace.